What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is May 19th of 2025. Well, folks, I hope you are having a fantastic day wherever you are, because in today's video, it not only feels good to be back here on the DataDash channel, but outside of that as well, I want to spend some time to do a major update in terms of all things related to Bitcoin, altcoins, the stock market, and not only do a deep dive on price analysis across all these markets and try to gauge where we're heading, but beyond that, talk about a big major systemic risk that's building not just in the microsphere of crypto, but along that as well in terms of the broader macrosphere and equities and assets as a whole. So we've got a really big update here since we last spoke. A lot to unpack here in today's video. If you happen to enjoy it, consider dropping a like, grab a cup of coffee, stick with me here. I think you guys are going to like this video. And before, though, we dive into the analysis, if you guys want to just dive straight into it, I'll have a timestamp down below. But I know a lot of you are probably fairly wondering, where have I been over the last month and a half? And that's a pretty fair question. I think I didn't probably handle the communication side as best as I could. But essentially speaking, in the last update that I did, guys, I mentioned how after about 7.5 years, I'm finally going to be taking a bigger step back from the YouTube channel. I'm definitely still going to be here creating updates, but probably more cadence of every month or a month and a half, and really coming to you with those really big updates. For me, I've really enjoyed doing YouTube all these years, but my goal long term has really been to make DataDash a home for a lot of different voices. I don't want you guys to be here in a constant echo chamber just hearing from me. I want you to hear from people like Paul, who I really feel is a great trader, as well as people like Ryan, who are bringing those more news-oriented updates or fundamental analyses on crypto, as well as a whole range of different news events. So if you guys are interested and you haven't already checked them out, I definitely recommend you do that. But if you are one of those individuals who really just has fallen in love with the style of content that I create here on the channel, you miss those frequent Monday uploads as well as the other content we would upload, then I definitely recommend you guys consider checking out datadashpro.com. This is where you guys can get access not only to my individual newsletter, the Dash Report, where we wrote a really good deep dive analysis back in the month of April, kind of going into the month of May, as well as a lot of really interesting reports over the last couple of months on our emerging market leaders and equities that we feel will outpace crypto. But outside of that as well, you guys can also get access to Paul's exclusive trading group. So these are all things that you guys will get access to within the DataDash Pro website. You can sign up for individual subscriptions like the newsletter or Paul's trading course, but also there's a pro bundle here where you guys get access to both services at a discount, as well as some additional benefits and features. Now, I'm not here to really just kind of plug it here. The main thing I just want to let you guys know about is that if you guys are interested in it, it's less than a cup of coffee a day if you guys want to subscribe to the Dash Report. But if you're also more of an active trader and you have that kind of macro itch like me, where I like to look at things in the broader perspective, or if you're someone like Paul who's very price oriented, you want actionable frequent trade setups in the market or certain plays to watch, and Paul's been knocking it out of the park here as of recent, just to give him credit where it's due on trade setups, then definitely check out the DataDash Pro bundle where you guys can get access to all of that. But at the end of the day, guys, I'm also going to be here on the channel. I'm going to be coming to you with the bigger updates on what's going on in markets. So if you guys still want to stay subscribed and continue checking out when I post those updates, as well as the content that Paul and Ryan are putting out, I think it's going to really prove valuable for you guys. There's a lot of noise out there in crypto. What I like about Paul and Ryan is they're focusing on the actionable developments and trade setups in the market, which is something that's very important for me personally to make this a home for quality content. So again, if you guys are interested, check out the link down below in the description. It's a great way to support me. It's a great way to support the channel, what we're trying to build here, and all the free content we put out. Needless to say, that's it in terms of that. I just wanted to let you guys know that I'm going to be still here on the channel from time to time, and let's go ahead and dive straight in to the analysis. So the first thing I want to go ahead and talk about here today is Bitcoin's price action. Now, since we last spoke, which if I'm remembering correctly was back in late March, kind of early April, essentially speaking, at that time, we've been talking about, and this is something we've really been calling for since back here when we saw the stagnation with the 21-day moving average in Q4 going to Q1. Essentially, we've been calling for this correction. And actually within the Dash Report, one of our big levels that we had targeted, that we sent out to subscribers, was looking for that $75,000 level. It's not only a big quarterly value here, up between that $100,000 value, that 25% correction from that big even level. But outside of that as well, this was just already a typical 30% correction from the absolute high, which generally speaking is going to be a range where buyers will likely come in here. Doesn't mean that we were guaranteed to hit new all-time highs, but essentially this is where buyers would likely come in and scoop up some Bitcoin. And that is essentially what we got here. We tapped that level exactly around $75,000, and since then we had a big shift here. As you all know, if you cover or really watch the updates that we put on here in the channel, we look for one key dynamic in the short term to determine whether or not bulls or bears are in charge. And that's how price is reacting with the 21-day moving average. Since back here in early April, we've been able to have that initial rally off of the lows on April 9th, and we came up here and were able for more than a week to make that 21-day support, pressing up against the 200-day moving average. This is a big dynamic factor that signals here that essentially the bulls have come back in charge, that they're leading the way forward in terms of price action. Whereas before, that 21-day kept knocking down price each and every time. Anytime we came up here and tried to hold it, we eventually faded back down. Anytime we got a big breakout rally, it was faded on the same day. Whereas we had a clear change of character here, and we're pressing through in these two trading days in between those moving averages. So right now, in the short term, the bulls are in charge here. And as we wrote about in the May article, we did what I would define as kind of a fair analysis here, where we covered crypto. We took a look at the overall price action for Bitcoin. We looked at stablecoin metrics like stablecoin market cap, as well as dominance in the market, the Microstrategy and ETF inflows, some of those key dynamic factors, some of which we'll also talk about here in today's video, that are going to determine Bitcoin's price at the end of the day. The biggest factors of really determining where price is going, irrespective of whether or not someone wants Bitcoin to go up or go down. We have to keep an eye on these metrics. And I took a more positive tone. I really shifted towards the later part of April because not only had our short-term targets been hit, but outside of that as well, that reclaim of the 21-day and the metrics started to look a lot better here in mid-April going into the later part. We really started to see a big change in those key dynamics that we're tracking here on the channel. So for example, those things that we wrote about in that article, how are they looking now? Are we still seeing that right now things are holding up well? Are we seeing any big red flags? Well, so far, while it's nothing absolutely out of the park, we are still seeing a continued increase in Bitcoin ETF inflows. You're still seeing, of course, obviously most of it's coming through BlackRock here, but it doesn't really matter at the end of the day. The net overall reading between all the US ETFs, you could include global ETFs, there's not much change there. Really, the big one is US capital markets here. And we can see that similar between here at the end of March and the end of April. In just a matter of 2 weeks, we have been able to continue expanding ETF inflows by tens of thousands of Bitcoin. It's not, the really high double-digit tens of thousands that we had seen here in prior months, or for example, here between the quarter of September going into December, right? We didn't see this massive expansion like we saw during this window of time, but we are still seeing that the number is ticking up here. It's not looking bad. There are no significant outflows. There's no stagnation of inflows. This was a big change of character from what we saw in Q1, where there was really no net change. If anything, there was a slight outflow from the ETFs. So Wall Street is coming and providing some degree of bid side support here at the moment. Along with that as well, we've got again, just to kind of visualize it here, if you're looking for a way to kind of track this, you can take a look at the inflows. When we started to see this reading here on April 23rd, this to me, especially as we started to see a flat line on the outflows that we were seeing back here in February, right? This was the initial sign to me that that next wave potentially was coming in to at least rise prices back up to those prior highs. We also have the factor of MicroStrategy, and while obviously MicroStrategy between Q3 and Q4 had a much bigger expansion, we are still seeing that so far MicroStrategy is able to pick up some pennies under the mattress, so to speak. They're able to continue issuing more convertible notes, buying more Bitcoin, and that has allowed for Bitcoin's price to sustain at this range. So at the moment, we have a really good data set to work with that is showing us essentially that if the ETF inflows are bringing in around 30,000 Bitcoin per month, and along with that as well, we're seeing MicroStrategy is able to acquire probably around 10,000 Bitcoin per month on average to acquire more Bitcoin, then this is enough to buffer against any outflows or sell side pressure in the market. These two things are the big bid side support pressures for Bitcoin's price. They are the buyers of last resort that are constantly driving up Bitcoin's price here, or at least sustaining Bitcoin's price. So long as they can maintain that degree of inflows, right now we can sustain this range of prior resistance here, the prior highs here up in this $100,000 range. Time will tell, and again, the 21 day is going to be your biggest factor here that you can really look for, and not to mention holding on those longer term moving averages as to whether or not that's going to continue satisfying sell side appetite, right, to be able to sustain prices where they are. Because at the end of the day, markets are a game of inflows and outflows. It's about where the market order sell side or buy side pressure, whether or not one of those is going to be bigger. There's always a buyer and seller, but it's a matter of who is leading in terms of market orders, people who are taking the best available price, switching from one asset to another. And right now, we can see that since that change of character in the ETF inflows and Microstrategy continuing to be able to raise capital, they are in the lead here. They're driving prices up here. That 21 day is what you really have to watch for in terms of price analysis. But externally, if you're looking for analysis beyond price, these are really the dynamics we want to keep an eye on here, that there's continuous quarterly increases in holdings for MicroStrategy. Now, the big thing I want to go ahead and talk about here before we dive into the altcoin analysis, just kind of to keep on topic here in terms of Bitcoin, and we're already talking about the subject I want to discuss. MicroStrategy, at the end of the day, I would say the ETFs, obviously the dependency in the ETFs is a little bit of a concern for me, but it's kind of the next leg up. It's the next means of inflows. The thing I want to talk about here is MicroStrategy as a systemic risk in crypto, because at the end of the day, people can go out and, BlackRock, for example, could issue new ETF shares to satisfy the spot demand for Bitcoin and, for Wall Street, for people who have pension funds who want to be able to have that, fractional exposure to Bitcoin or really a substantial stake and use it as a treasury asset. That's not really a problem, because if Bitcoin goes down, they can continue to hold that forever. However, strategy, on the other hand, I'm getting a little bit concerned about here. Having a singular company owning such a large amount of Bitcoin here and passively continuing to buy more Bitcoin at current prices and narrowing down the overall unrealized profit or loss here in terms of the return for the portfolio, because the cost basis is getting bigger and bigger and bigger. Now, I understand MicroStrategy here is a lot of bulls will tell you MicroStrategy can operate at a loss. Like, it can go into the red, and it can, go into the red for some time, right? That's true. And along with that as well, MicroStrategy, in this case has the ability, at least now, to continue issuing new bonds or convertible notes in the market and raise more debt to buy more Bitcoin, right? My main point here is that at the end of the day, with an $18 or $19 billion unrealized profit here for strategy, and along with that as well, considering that this ability to raise capital to buy more Bitcoin may be a blessing here today, but not be something that can be afforded for MicroStrategy in a couple weeks or a couple months if sentiment shifts, we need to understand here that in the same way you had systemic risk with companies back in the prior bull market in 2021 in terms of companies like Celsius and BlockFi, in terms of companies like FTX that had taken considerable risk and utilized leverage. This could cause an unwinding here for the crypto space, not so much in this big systemic liquidation risk. That is one thing that I really think people are underestimating here, and they're blindly taking the words of Michael Saylor in this case, that they will never sell, that there would only be a black swan event that would be a problem for MicroStrategy here in terms of failing on strategy. But I want you guys to consider here, irrespective of, let's say MicroStrategy doesn't even sell a single Bitcoin here today from what it's holding, what we need to understand is that where Bitcoin's price is today, if MicroStrategy doesn't have that ability to continue acquiring Bitcoin, if it can't continue to acquire tens of thousands of Bitcoin per quarter, let alone what we saw back during that period of time back in Q4, where we had this massive expansion of nearly 100,000 Bitcoin within a 3-month window that really drove the November rally. If MicroStrategy cannot continue getting that appetite from Wall Street to continue buying Bitcoin, this is going to be a huge negative factor for Bitcoin's price. And I would bet if you start to see that, that's also going to play out in terms of the ETF. Now, if we can't maintain those inflows here, And we imagine that Bitcoin is pretty much ranged sideways here from November. And during that window of time, just to kind of analyze the numbers here, right, we can see that since that window of time, during the kind of ETF and stuff, we've essentially added well over during that window of time, 180,000 Bitcoin probably during the ETF inflows. And along with this, well, MicroStrategy has added another 100,000 Bitcoin in that period of time. So we're talking about a massive inflow of over nearly almost coming up on 300,000 Bitcoin being purchased in that window of time, while price has been generally kind of ranging sideways here. We've got to ask what's going to happen when we don't have, within a 3 or 6 month window, that kind of ETF inflows, that kind of MicroStrategy purchases. And it becomes a really big risk factor here for Bitcoin, not just in the fact that MicroStrategy might become a net seller one day of Bitcoin. That's really where things would get quite nasty. But irrespective, if we just can't maintain that pace of inflows and in fact start to turn neutral, you're going to have the same situation you had back here in March. It's not disastrous, but it's what leads to a downtrend and what led Bitcoin to losing $40,000 from its relative peak valuation. So I just want you guys to keep that in mind here, that it's not all just sunshine and rainbows, and that at the end of the day, we've built a very big dependency. There's no arguing or debating this. You can see the numbers. There's nothing else that the market will point to, even the bulls would point to, like those who are just perma-bullish, believing people like Plan B that Bitcoin's going to go to $500,000 in the next 12 months, whatever. That they will tell you that it's MicroStrategy, Michael Saylor, and the ETFs and Wall Street that are coming and buying up Bitcoin. So there are big question marks to be addressed here, and this really leads into kind of the macro discussion, which we'll talk about in a little bit in terms of what's going on with stocks. But I want to go ahead, spend a little bit of time with altcoins here, and we'll get into that in a little bit. So let's just go ahead and take a look at altcoins here, right? Because one other really interesting dynamic here that kind of talks about the risk-on sentiment as we're approaching the prior all-time highs here for Bitcoin, right? That prior resistance range from back in December and January. I want to also see altcoins showing up to the plate. If I really believe Bitcoin can charge forward, I want to see that markets are taking on the more riskier plays here. And what we saw over the last week and a half really has kind of, at least so far, has crushed that perspective. The fact that we're still getting weighed down by the 100-month moving average in terms of others' dominance, and we have yet again faded down those gains. We can't hold the 21-day moving average. This to me doesn't look like there's any significant change in the altcoin trend. And I say that as someone here who was starting to get quite interested in some altcoin pairs. There were a lot of pairs starting to look like they were setting up just about a week ago. But we can see if we take a look here on the weekly on others' dominance, it looks like this is still with the area that should be the bid side support, that should have been the buy range back in February if we had the legs to really continue onward, is now not looking just like a short-term deviation. It's looking like the new norm, and that we've got to come down here into a more capitulative range, a range in which we actually highlighted in the dashboard for quite some time here, the 6 to 8% range. So again, this is the kind of analysis that you guys can get in terms of the dash report here. I want to show you guys some bits and pieces of kind of how we're looking at the long-term opportunities here. I'm not opposed to taking trades in altcoins. I don't want you guys to think I'm a perma bear here. As we talked about in April, we really shifted on the idea that Bitcoin, at least short-term, had reclaimed the 21-day and is starting to show some changes of character here where it could at least hold out for some time. But the main thing here is that we are setting our standards before building any substantial entries. And altcoins are really where the multiple opportunities will be in the event of some kind of uptrend. For example, we had a trade set up here for Ethereum. We started to see here in April that we had been ranging for the greater part of the month. So we had a really great risk reward setup here where we could afford to lose 10% if it continued going down, or we could build an entry here on a breakout in the 21-day. And look at that. I mean, just huge expansion here for Ethereum. And now it's trying to reclaim this prior support range from back here in mid-March, as well as the 21-day and the 100-day here. There are some plays, especially the large caps like Ethereum, that I think obviously people are looking towards the kind of narrative that BlackRock and a lot of major financial institutions have shaped, that Ethereum is going to be this kind of main on-chain platform for DeFi and institutional DeFi. And we can see here, of course, obviously ETH was just way oversold. It was down like 80% here top to bottom. Clear range where buyers would likely come in here. Another reason why we were looking for this spring up in April. But the main thing I want to say above all is that while there is some optimism in Ethereum here, I mean, obviously we've cooled down a little bit over the last couple of days. When I take a look at the broad altcoin market, I'm seeing mixed signals. I see Solana multiple times when it's having pullbacks while it's having higher lows here, not holding on the 21 day, facing resistance at the 200 week, right? This red and orange line here where we saw resistance back in March against Bitcoin. And just again, zooming out on the longer term time frame makes it even easier to see this. It just doesn't look good. It doesn't look to me like we've gotten some kind of bullish confirmation. And this is the play that should be outpacing Ethereum. It should be outpacing Bitcoin, right? Same goes for Ethereum here. While we've got this nice breakout here, and of course there might be an ability to continue forward. Right now, I definitely think that we need to be a bit more cautious here, because if I look across the other plays, Stacks, for example, was making some nice moves. Definitely had a nice rally off of the lows, going up around, I think, 70% off the lows here. Still facing resistance at the 100-day, not holding on the 21-day moving average for multiple days. Not a good look for me personally. That doesn't look good. Fetch. This one looks a little bit better. It's trying to hold in that 100-day pocket here. Again, the moving averages are very critical here. We got above the 21-day, which was acting as resistance, so we've got that change of character, but not holding on the 21-day. Not a good look here. And I think for a lot of people who might have bought those lows there, they're up 50, 70, 80% against Bitcoin. Some might be eager to take profits here if it's not holding at those ranges, right? We also got Render as well, right? In terms of its Bitcoin pairing coming up here, not able to really hold above the 100-day when there was 2 opportunities to do so, and now we're fading below the 100-day moving average. And we barely gotten off the ground here with some of these pairs, right? So this to me, as someone who's, I don't care about paying higher premium. I'm not trying to catch absolute lows. You can see we're really not that far off of the lows here in terms of its altcoin to Bitcoin pair. And of course, if you're talking about in dollar terms, sure, it's up a bit alongside Bitcoin. But my main point here is that we want to buy when altcoin pairs are outpacing Bitcoin. We want to know when it's easy to step in and get that 2, 3, 4x return against Bitcoin, which will probably also be going up during that period of time. And this, to me, signals, as I look across the pairings, I also look at leaders like Sui, which definitely is playing better out than most players, starting to fade against the 21-day here. And I got to ask whether or not it's going to hold these long-term moving averages here, or if this is just kind of a head and shoulder pattern here in terms of the recent rally we've seen. I got to wonder about the bigger, broader question. Are we in a macro environment that's ready to establish new all-time highs? Are we really in an environment here where equities are going to rally to new all-time highs? Bitcoin is going to rally to new all-time highs. Altcoins can really have a bigger, broader expansion of altcoin dominance. Maybe they don't go to their prior all-time highs, but maybe market cap terms are getting close. This is a really important question to ask, guys. And I don't see a lot of people asking it because I think a lot of people are complicit. It's not meant as an insult, right? I don't want to grandstand or anything, right? I've gotten things wrong before. But I always have a healthy skepticism when it comes to passive euphoria in the market and how markets can get very irrational in a very short window of time after being very fearful and think that essentially it's always going to be buy the dip, it's going to be sunshine and rainbows. We're going back. It's the same playbook over the last 10, 15, 20 years, and it can never go wrong. When I take a look at what's going on with equities here, I have one big question mark, and that is how price is going to react when we come up to the generational line of resistance. I know you guys probably are tired of me bringing this up here. You will definitely remember it if you watch the channel on a frequent basis. The 95-year-long channel that the S&P 500 has been could not be more relevant here today than it has ever been in history. It is incredibly relevant in determining whether or not equities and assets as a whole are going to go through a further expansion over the next few years. It was relevant here from November to February when we were facing chop and resistance here, inconsistency at the 21-day, and then had this broader correction, 21% down from top to bottom here. But it is also relevant here with multiple big gap ups in price here off of the hopes of establishing deals in terms of the deal with Ukraine, the deal with the UK, deals with a variety of countries like China, and a whole range of other countries that are currently in these trade negotiation talks. Now, I want to talk about one clear thing here, guys. Irrespective of whether or not the trade negotiations go through or if they don't, I'm actually not here really to talk about the political side of it. At the end of the day, I think that a lot of these deals could possibly go through and stuff. I'm not here to play negative on that and just play devil's advocate. What I'm here to talk about is that even if those go through here, it is not a guarantee that equity markets go into a new bull market. The number one thing you have to watch here is whether or not we are going to clear through this line of resistance, right? Or if we are going to be able to hold on the 200-day moving average and ideally the 21-day. Now, the reason I want to talk about this here, this is a very important thing. If you go back in history and look at a lot of the major bull markets, we actually talked about this in the webinar that we did this past month around the 15th or 16th in the Dash Report newsletter group. We essentially talked about how holding the 200-day is one of your biggest gauges as to whether or not we're really back. And if we don't hold the 200-day, that is a big warning sign that markets have lost the bid side support to continue an upward trend of higher lows and higher highs. I'll give a great example of this. Just take a look back here in 2022. We broke the 200-day. Well, not a big deal. Buyers came in here, we got back up. But where did the problem start? The problem started when we kept breaking below the 200-day. We tried holding it for a couple days here back in February 2022. Right? We had another fade down. We reclaimed the 21-day. We tried again. 200-day could not hold, and it started acting as clear resistance. That, in the same way how the 200-day provides bid side support on the upward trend generally in a bull market and an uptrend, the 200-day is where you want buyers to come in to support price. You can see that here very clearly throughout back here and at 2019 to 2020. You can see it back here as well as we started to trend upwards from March of 2023. We started to clear through and make the 200-day support. It should even be the buyers. Don't even wait for the 200-day if you really got an optimistic trend, right? So my point here is that when that 200-day starts acting in the opposite direction, starts acting as resistance or failed support, then that is your warning sign. You can see that with pretty much any trend here. You can see it here with the March 2020 collapse here. We tried to get back above here. We couldn't hold it. We faded back down, and we had a major flash crash going into the kind of pandemonium around that. You can see it here in 2018. Where we declined from around 2,700 down here to 2,300 and into the 200 week when we could not hold that 200-day. And you can also see here how the 200-day gets respected in an uptrend here. Something that was price-wise looking very bad here. Lower highs, barely holding by around the 200-day, but was still being respected. And we reclaimed the 21-day. But I want to get into the big picture. You could look here in 2015. I remember trading this back there back in the day. But this is the big one I want to talk about, guys. Even in 08, right, just turn off the drawings here. Look at the price action. This is a prime example here where the 200-day, right, we were able to reclaim it multiple times here after dipping below it. But we just every single time showed more and more weakness at the 200-day, and it started acting as resistance, and then you got the big sell-off. This is the same case here in 08. It is the same case here in the dot-com bubble, many times deviating slightly below that 200-day, not able to hold it, starting to treat it as resistance. It is an incredibly simple and important playbook to follow. And what I'm very concerned about here, I don't want to be too melodramatic. I don't want to approach it in an emotional way, so to speak. What I'm very worried about as a trader is that I know in the same way when we started to get these gaps here on April 3rd, here on April 4th, we bought the dip here. We actually took a really great trade after the gap fill. There was a gap here. I'm going to go ahead. We'll turn off the moving averages here so you guys can really see this here, just analyzing pure price. This is like really powerful stuff. We had highlighted this gap here back from May 3rd around 5,070 points on the S&P 500. And that was our target for the pullback. And we made some really great trades in equities. We made 10% on our entire portfolio, at least I did. In this case, I know many people copied alongside the trade in a matter of less than, I think, 24 hours from opening and closing the trade on some equity trades. We called for this gap to get filled, and look at where that bottom was established. There's a very important rule you need to understand. This doesn't apply in crypto because crypto markets trade 24/7, but if you're talking about equity markets, you have what's known as gaps. It can be essentially the spread between where price closed in the prior day and where it opens the next day. And that's what leads to these big, kind of overnight moves when markets open. They're pricing in changes in the market and changes in sentiment, and that target got hit almost perfectly. We went a little bit lower in that case. But once we'd hit that gap target, I knew that I could start building some entries. So the rule here is that while it is not a guarantee, 80-90% of the time, gaps are going to get filled in markets. That is a general rule of thumb when it comes to individual stocks. It's a general rule of thumb when it comes to the broader indices especially. Now, this is again where my concern comes in. I know I'm rambling a bit, but this is what I'm getting to here, guys. We have had some big gap ups here on hopes of some of the developments around these trade deals. And again, even if they go through here, you can see that there are very clear gaps here. Here, for example, on May 12th, and here along with that on April 23rd. As we approach this prior range of resistance, this historic line made up of the most euphoric periods in history, the roaring 20s, the dot-com bubble, and where we stand here today, the idea that we're going to be in a world where AI is going to massively automate away all jobs. We are going to live in a absolutely amazing, beautiful time where we can all be in, retirement at an early age. Demographics are not a concern. AI is just going to come in. AI, robotics are just going to completely transform the landscape of the world as we know it. It's going to create an abundance of wealth, which is what the market is pricing in here, buying the dip on. And that the Fed is just going to come buy the dip and, or essentially come in with the plunge protection team and provide the ample support needed, the increase in the money supply for equities to just keep churning higher. All those hopes are being priced in here. If we can't reclaim that $6,000 level here, this line of resistance, and we roll over and we start filling some of these gaps, if we can't hold on those moving averages that we've highlighted here, again, a key 200-day moving average, that is going to be a major red flag not only for stocks, it is going to be a major red flag for Bitcoin and altcoins. Because while I know a lot of people are thinking, because they've seen the rally in gold recently, that Bitcoin alongside gold are kind of decoupling from equities, this couldn't be further from the case. You take a look here, April 7th is when stocks bottomed. Bitcoin bottomed on April 7th. That's when the absolute low was set in here. And it has uptrended in lockstep with equities. All right. It has not traded similar to gold. Gold was initially moving faster earlier and has topped out since back on April 22nd. Bitcoin, on the other hand, very different story here. Very similar to what's going on in equities. So I want you guys to keep that in mind here, that Bitcoin is a risk-on asset. It is not this alternative hedge that you go to. It is a money debasement hedge. There's a big difference between an inflation hedge and a money debasement hedge. Inflation is a symptom of excess printing of money, or in many cases as well, supply chain disruptions, things that are going to basically increase the cost of goods and services. It's mainly a monetary phenomena. But when we talk about Bitcoin as a money debasement hedge, right, similar to equities, it is something that helps you when there are massive rapid expansions in the money supply, right? And while there are some general increases in M2, it is not to some crazy extent that is going to propel some massive bull market here, right? At least that's not the likely case. And I would wait to see what happens at that key line of resistance that has held down price historically for a long period of time. Because when I look across the board, I'm seeing not only that gap in equities, I'm seeing the gap in the VIX here. There's a big gap here from May 12th. Gaps on the VIX almost always get filled historically. I don't know of any occurrence where it doesn't get filled. So that gap is sitting there. And that means if volatility is going to spike up and potentially get back above the 21-day, that would mean that equities, at least at a minimum in the short term, are going to start to cool down. Outside of that as well, when I take a look here at Microstrategy, in terms of equities, as we talked about as a systemic risk, if Microstrategy is unable to establish a new higher high, that is also, to me, another sign of potential risk-off sentiment growing in the market, that there's not enough buy-side pressure to continue this game of, essentially kind of this game of musical chairs that has allowed for Bitcoin to sustain this $100,000 price tag for some period of time. If MicroStrategy cannot establish a nice, that's a big red flag. And outside of this, well, if we take a look at a lot of the major equities out there, the prior market leaders, Not only has NVDA been flat here for almost, it's coming up here on a year, which is very concerning. It has started to underperform against equities. But outside of that as well, it still hasn't set a new higher high here. If that starts to change and we start coming down and rolling down and filling some of these gaps, you guys can see how quick this starts to move down. And it's been moving at a more heavy and accelerated pace to the downside with each and every correction. So I don't want you guys to get caught being too euphoric in these names. Apple still establishing lower highs each and every time. This is the biggest company in the world, guys. This has major ramifications for the broader trend of risk on or risk off sentiment, the valuation premium that people are paying on equities, right? If we can't, for example, this is also another really important principle to keep in mind here when it comes to gaps, just another lesson here to talk about the significance of them. Considering that most gaps get filled, if Apple, for example, does not see its gap at 221 getting filled, right? Not saying that eventually one day it may not get filled or something, it may get filled one day. But if in this short term here, 213 is acting as resistance and we start rolling over and filling this gap before this one, this could be a sign here that we are essentially heading in for real recessionary bear market price action over the next year or two, right? Essentially meaning that if you can't, come on, give us another $10 here, a couple percentage points for Apple. If Apple can't reclaim that, that's going to tell you a lot about how the sentiment is shifting here, right? In the same way this gap got filled down here and buyers came in and bought it up, we should expect that at least Apple can come up here and fill this gap. If it can't do that, that tells you that some alarm bells are going off here. And for a company that is valued at over $3.16 trillion, major equity dominance, the same way we look at altcoins or Bitcoin dominance, Apple's got a huge weight on the performance of equities. Passive investors could get really cooked, basically thrown off guard here, so to speak, and lose a lot of their returns if Apple cannot continue to reclaim higher lows and higher highs. With all the buyback programs, with how cash-rich Apple is, that would be a huge warning sign. We can also see here for Microsoft. Microsoft's probably in a much better position than most players. Had a good earnings report, right? But still coming up here in this historic resistance range. Let's see how it holds out, because if it doesn't continue trending, if it can't hold that 21-day, you got that big gap down to 397. You got a gap down here at 368. And that could be, yet again, just another rollover here, making this further proof that this is just a distribution pattern or a range here that was not able to break out to new highs. And then, of course, we have FANG here as well, which so far has not established a new high, but still definitely has had a nice recovery so far. So the main point here I want to say is I'm not here to be all doomsday, guys. As you guys probably heard at the beginning of the video, when we reclaim the 21-day moving average, we usually lean into that trend. There have been some opportunities in the altcoin space since those situations have changed. And I know a lot of people in the dashboard have taken upon some of those trades here that we wrote about in the Dash report. But my main point here, I just want to echo to you guys, irrespective of whether or not you're interested in becoming part of the group in that case, or if you're just someone who's more passive in the market, dollar cost averaging, etc. Keep in mind that there's a couple things to keep in mind. First off, what's keeping the market alive right now are very few players who are taking over amounts of risk, that are going all in here, especially players like Microstrategy and crypto. That has become equally, if not a more important pillar sometimes than the ETFs themselves, especially back in Q4 of last year. And outside of that as well, we need to understand that the return profile has become a lot less sexy. There's no other way to put it. I mean, MicroStrategy is targeting, hopefully Bitcoin maintaining a pace of 30% on an annualized basis. That's a big shift from being able to hold Bitcoin and getting a 10 or 20x return in a matter of 2 years or so, time and time again, buying after 80%, 90% plus corrections in price. We're not seeing that anymore. And the same goes also for big technology companies. Apple going to $6 trillion, fat chance. Apple's financials have been flat for the last 4 years. If anything, you're going to get a big PE multiple contraction. And that can mean that Apple's financials stay exactly the way they are. There's no tariff concerns, no disruption, no geopolitical concerns going on. And still, Apple could lose 30, 40, 50% because the PE multiple, the price people are willing to pay for its earnings, go down. We've already seen Apple contract from 260 down to 170. and how quick it happened. What if we start coming down here to historic range of support back here? And what is that going to mean if Apple comes down here, for example, to 120, this prior support range from 2020, really fades down a lot of its AI-related gains? That's going to mean trillions upon trillions of dollars of wiped out value in equities. It's going to mean trillions, well, not per se trillions, but probably $1 trillion wipeout in Bitcoin and altcoin market cap as a whole. It's going to mean lower prices. And I think so many people are already, drinking from the punch bowl, so to speak, that it's a return back to the norm here in terms of stocks, in terms of crypto. I'd wait and see. Now that we're above the 200-day, this is where the real rodeo comes in, the real, opportunity for the bulls to show up to the plate. And if they can drive the rally, that's great. But the question is, can they hold it? Can they hold here on the 200-day? I have no, I guess kind of stance in the fight, so to speak, guys. Meaning that I don't really care for equities to go up or down in either direction. I don't want to give off that sentiment. But what I will say here is that I've got the signs I'm watching for here, and I'm not going to let the euphoria or the narratives lead me in any direction. I'm going to make smart, informed decisions off of what I know works in markets, the time-tested signs that are going to tell me whether or not the markets are really ready to clear through here. If we're going to have some major money debasement, if the U.S. is focused on weakening the dollar, all that could be catalysts to drive this up and spark another 6-12 months of upward trend in price action in assets as a whole. I'm not closed off to that idea. What I am focused on, though, is making sure that the signs present themselves and that certain boxes are ticked off before I really start taking that risk in markets. We avoided a lot of downside here in the prior correction, and a lot of this well made some really great returns in a very short window of time when that opportunity was presented, right? I feel much more comfortable being in a cash position here, and that's a very big shift from back, say, in 2017 when I got really heavily invested in crypto for the first time, or in 2019 when we were betting on the next uptrend, right? Right now, I don't feel like we're in the environment where you want to be passive and hodl in the market. But time will tell here. We're going to see how price plays out over the next couple of days, guys. Anyways, in between then, if you want to hear what I'm thinking about in terms of markets, what I'm doing with my capital, if you want to get access to my trade alerts, if you guys want to get access to the mid-month webinar where we answer your questions, if you guys want to get access to the newsletter where we cover crypto, stocks, commodities, and Forex, and you also maybe want to check out Paul's trading group as well, where he's covering a wide range of altcoin setups, talking about how to employ proper risk management for shorter term time frame trades, then definitely consider checking out the link down below in the description for DataDash Pro. It's an interesting way where you guys can get that further in-depth analysis in the markets. It's a way you can keep up and get further relations with what Paul is doing in markets as well as what I'm doing in terms of my setup. And some of our most active and creative and smart members. I learn new things from members in the Dash Report community. It's another huge asset on its own as a part of the Dash Report. So I'm really blessed to have such a great community of contributors from all over the world who are just kind of sharing their thoughts on markets in there. So there's a lot that you guys can get access to in terms of that subscription service. But even if you don't, guys, I hope you guys are having a phenomenal day wherever you are. It was so great to be back here on the channel. And I'll be back here yet again another time on another video. But until then, thank you guys so much for tuning as always. I'll see you guys right back here on the next one. Take care, everyone.